George Thomas, fund manager at Quantum AMC, joins us now to discuss market fundamentals and his stock sectoral picks. Thank you so much, George, for joining us. First up, if we could have your views on the markets at current levels, are valuations now a lot more palatable than they were maybe at the start of 2025?
Yeah, thanks, Vivek, for having me on the show. See, a few months back, we had turned cautious on the markets, primarily because the valuations were not favorable, and even the earnings print had shown some bit of muteness. But as we stand today, with the correction that has happened in the past few days, so at least from a large cap perspective, if we look at it, the upside has turned favorables in many names. And even if we look at our portfolio upside, which has given us a fair sense of where the markets could head in the next 2 years, it is more closer to the longer term averages. So we have been buyers in this market, and our sense is, at least in the large cap universe, we have reached a level where investors can think of increasing their allocation. For the last few days, we have been adding a bit of weight in few of our existing names and a new name, primarily from insurance, large cap IT, and a gas trading company. But if you look at the small and mid cap segment, they're considering the recent rally. So our sense is there is some more froth left in that space, and it remains to be seen on how things pan out there, primarily because almost 50% of the new folios has come up in that small and mid cap space. And even if we look at 1 year forward valuation or trailing valuation, that segment continues to be slightly on an elevated level.
You said insurance, large cap IT, and a gas trading company.
Correct. That's
correct. Is that where you've added in the last recent past?
Correct.
Okay. There was this greed and fear note where Chris Wood has said that for confidence to return in the market, perhaps the valuations of mid and small caps need to converge with large caps. And when that happens, maybe money will start flowing back into the Indian equity markets. Would you concur? And if that has to happen, if mid and small cap valuations need to come down to large cap, align with large cap valuations, how much more of a derating or correction do they need to undergo?
See, I was just checking at the historic chart, and we have a chart where we follow the mid cap PE versus the large cap PE on a 1 year forward basis. So as of Jan end, so what has typically happened is when there is a fear cycle and when you see long periods of redemption from that small and mid cap space, that chart, the PE of the mid cap index has converged with the large cap index. So for that to happen, if we were to look at the Jan 31st number, so the mid cap PE had to correct by about 25% for that to converge with large cap index, and that has happened in the past redemption cycles. But it remains to be seen how the new investor behaves in this cycle. So like I said, initially, most of the new folios, almost 50% has come up in the last 4 years. And clearly, it looks like the asset allocation of the new investors are skewed towards small and mid cap, which may not be the right thing to do. So it remains to be seen, as volatility kicks in, how that cohort kind of behaves.
Understood that, George. Very important to watch how that particular end of the segment behaves in this particular market fall. George, in the last couple of trading sessions, we've seen a very sharp correction, in a couple of sectors, especially the wire and cable segment. Do you like any of the stocks over there after the 20% correction we've seen across most of those names? Do they look attractive?
See, it shows up a very simple point that when you have abnormal cash flow generation and high ROEs, competition is bound to hit. So none of those wire and cable companies kind of fit into our valuation criteria, and therefore they don't make to our portfolio. But for a new incumbent to make a sizable dent, our sense is it might take a few years. And most likely, the market share gain could be from the unorganized and the lower tier 2 or a tier 3 player, which are beyond probably the listed universe. But we don't operate in that space primarily because of valuation reasons. So considering a steady state profitability matrices, and when we put the valuation framework, so none of those companies have fit into our criteria.
George, what about banks and NBFCs? You know, there's been significant amount of relief coming in from the RBI in terms of reducing risk-weighted assets over there. Do you like any of the names there? In fact, some of the NBFCs that have sold off significantly. Do you see value there?
See, private sector banks, we have been quite positive, and that remains to be our largest weight. So NBFCs, we have select exposure through a couple of NBFCs. So one is obviously a commercial, one is a commercial vehicle financier who operates in the secondary market or the second-hand market, and the other is a housing finance company which has a favorable cost of funds. So in that segment, our sense is, unless you have a clear niche, either in terms of underwriting or in terms of cost of funds, you could stand out. But otherwise, we are not biased into some of these housing finance companies or the recent companies which operate in affordable housing finance, where we have seen a fairly high amount of growth in the last few years. So we are watchful in terms of how their underwriting standards kind of work and how their collection mechanisms are in place. So otherwise, we would stick to players which has an edge in at least some of these parameters.
Understood that, George. Thank you so much for joining us and giving us a sense of the markets, even as we try and navigate what is now turning out to be a very steep sell-off. Well, as we now slip into a short break, here's some good news for our viewers. India's business news leader is now just a click away, introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC TV18 app now from the Apple Play Store or the Google Play Store, or just scan the QR code on your screen.